Let's talk about transitioning from sole proprietor to C Corp. What is the tax impact here? So let me really give you this overview. So changing from a sole proprietorship to a corporation helps protect the business owner's personal assets by actually segregating them from those of the business, right? This is pretty good, very fantastic, wonderful. The level of protection varies depending on the type of corporation you select though. So S corporations are often used for small businesses and not really usually taxed at the corporate level, but rather on dividends. And C corporations require you to pay corporate taxes, but you can also appoint a board of directors and issue company stock. And LLCs provide similar protection of personal assets, but owners called members in the LLC can receive their company profits without paying corporate taxes in some states. And an LLC also allows for greater flexibility for profit distribution. So this is kind of cool. Now, what I want to say here is that there are some pros and cons of incorporating a sole proprietorship. And because basically in a sole proprietorship, only one person owns the company, right? Sole proprietorship. And the owner doesn't pay corporate taxes on any profit, but instead reports it on his or her personal income tax return. And some advantages of this business type include fewer regulations, less paperwork, simpler tax returns, and one profit beneficiary, only one, sole proprietorship. And so there are many advantages of incorporating a sole proprietorship besides separating your personal assets from your business, including your personal assets are not at risk if there is any company lawsuit or bankruptcy. Note that you may want to consider business liability insurance because there are some cases in which you might be liable though. And also corporations offer tax savings, which actually varies in terms of depending on the profits your corporation is realizing. So what I want to say here is that when we talk about the tax structure of a sole proprietorship, you are basically filing Form 1040, and any profits or losses that you actually have derived or generated through the business, you actually will report it on Schedule C. So, but the thing is that you are filing taxes at the personal level. So the tax rate is your individual tax rate. Okay. You don't have the 21% that corporations pay. No, if you are in the 39% tax bracket, you're paying tax 39% on those, on that income or loss. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now let's talk about when you should incorporate a sole proprietorship. In other words, when should you convert a sole proprietorship into a C corporation? Now you can incorporate a sole proprietorship at any time of the year, but it is really best to do it close to the beginning of the year because you must file a different tax return for each business type you operate during the year. Okay, so it's one of those things where if you want to go with a calendar year, so you want to maybe do the transition around December, like December 15th, so that you start the new year with a C corporation tax status, and so your C corporation will start on January 1st. And also, basically, let's talk about transfer of assets. So once you have created your corporation, you must transfer assets from your sole proprietorship to the corporation. And it's really important to remember to make transfers at a fair market value, okay? Because some assets might need a reputable valuation company to evaluate them. And doing this involves transferring shares of the new corporation to yourself, the owner of the sole proprietorship, to cover the amount of the assets being transferred. And it's really important because there are some tax implications, there's some tax consequences here, because assets that are transferable include physical assets such as property, equipment, computers, vehicles, and furniture, and also intangible assets and intellectual property such as the company's brand names, reputation, royalty agreements, trade secrets, trademarks, copyrights, patents, and long-term relationships. So when we talk about the tax implications, there are two primary types of tax implications. Number one, you have gains or losses that are actually recognized or realized during the transfer. So there are some tax implications here. And you also have if you have temporary differences between the tax value, the IRS value, and the financial value. That's what we call, and not what we call. This is what accountants call deferred tax assets and deferred tax liabilities. And on those liabilities and assets, there are some potential tax consequences as well. Boss, I want to quickly remind you of today's topic. We are having a conversation about transitioning from sole proprietorship to a C corporation. What are the fiscal implications you need to be aware of? Now, let me give you a few pro tips. There are other points to remember here, okay? Incorporating your business is an exciting step, that's for sure, but the process can become complicated. So it is particularly important that you properly document each phase of the process. Therefore, it is actually recommended that you actually consult an attorney. It can be a tax attorney, it can be a CPA, it can be an enrolled agent to help you with closing the sole proprietorship and creating the corporation. Because then if you have a tax specialist, that tax specialist will tell you all the tax implications of every single move. And some other points to remember for your new corporation include employees transfer into the new corporation by firing and hiring each employee. You want to actually close business accounts owned by your sole proprietorship and open new accounts for the new corporation. You need to obtain a new EIN, so a new federal tax identification number from the IRS. So depending on which state you incorporate your company in, you may also need to apply for a state tax identification number. Otherwise, it is the same number, give or take, that you actually use your EIN, your federal EIN, also for state purposes. You also need to think about canceling any insurance policies owned by your sole proprietorship and open new policies for the new corporation. You want to file articles of incorporation for corporations and actually, or articles of organization for LLCs for the state where you incorporate your company. You want to dissolve the doing business as in the states, city, or county where originally filed. You also need to file a tax return under the old DBA and request that the IRS close out the account and tax ID for the sole proprietorship. Do this after obtaining a new EIN for the new corporation. And then what you want to do also is that you really want to update corporate documents, including letterheads, websites, business cards, telephone listings, and other contact information to reflect your new corporate information, right? And so those are really important because having the right structure, legal structure, will position you to have the right tax structure also, especially at year end when you file your taxes with the IRS or state tax authorities. Let me give you a bonus here. I want to really go back quickly to sole proprietorships because it's really important to understand that, if you're going from sole proprietorship to C corporation, you need to really have a clear idea and ask yourself, is this the right move? So I want to show you the pros and cons of sole proprietorship so you have a clear idea. So fundamentally, sole proprietorships are intended for simple businesses owned by one person or a married couple. Such businesses are typically freelance businesses, consultancies, small service businesses, food stands, etc. Sole proprietorships don't have shares or ownership units, meaning that the only exit option is to sell the assets of the company. And sole proprietorships are by far the simplest business structure. And a bona fide business that starts without formally incorporating is, by default, a sole proprietorship or partnership, depending on the number of owners. And sole proprietorships with no employees don't even need to register with the IRS. The owner can simply use their social security number as the business tax ID. So some points that you need to be aware of. Business expenses are deductible. So contrary to popular belief, there is generally no need to incorporate to deduct business expenses. Even an unincorporated sole proprietorship is eligible to deduct its business expenses. Proprietors actually pay personal income tax on profits, so they cannot pay themselves wages. They simply withdraw company profits as needed. Each year, they owe personal income tax on the entire taxable profits of the business, regardless of whether they have withdrawn the profits or not. And the profits are subject to FICA tax and federal income tax. So this is really what it is. So as of this year, the FICA tax is 15.3% of income up to the Social Security limit of $160,200 and 2.9% of income be earned beyond that. There's also the additional Medicare tax of 0.9% that applies after self-employment earnings exceed $200,000 for single taxpayers. So this is what it is. And in our experience, many small many small sole proprietors end up owing more FICA tax than federal income tax, but this depends on individual circumstances. So when we talk about the pros and cons of sole proprietorships, the pros is very easy to set up. It's easy for most owners to understand. You have a separate business tax return is not required, and no payroll to run if there are no employees. What about the cons? All profits are actually subject to a FICA tax, and owners' personal assets are not protected unless company is formed as an LLC. Boss, I want to quickly remind you of today's topic. We are having a conversation about going from sole proprietor to C corporation. What are the tax implications? Let me give you the approach you need to really pay attention to. Now, C corporations also have advantages and disadvantages, and it's really important to really talk about them real fast. So basically, when we talk about C corporations, we talk about C Corp, right? This is a legal entity that protects the owner's personal assets from creditors, and it can have an unlimited number of owners and multiple classes of stock. So these characteristics and other advantages make it a good vehicle for attracting venture capital and other types of equity financing. And unlike an S corporation or an LLC, it pays taxes at the corporate level, so double taxation. That means it is subject to the disadvantage of double taxation. As well, a C corporation also must comply with more federal and state requirements than an LLC. So C corporations provide the following considerable advantages in our view. You have separate legal entity, limited liability for the owners, perpetual existence, so you can live like the C corporation can live forever. You have separation between ownership and management, no restrictions on who can hold shares. You have readily transferable shares. You have well-established legal proceedings, widespread acceptance by the venture capitalists and other investors. You have the ability to offer stock options. And you have tax planning opportunities. So this is kind of cool. And so it's really important to understand that you have those advantages here. Now, one thing I want to say here is that when we talk about C corporations, there are some disadvantages. I'll talk about the disadvantages later on, but it's really important to understand that basically shareholders do not directly manage the corporation. They elect executive officers, if you want. And some states also have a statutory closed corporation law that allows shareholders to manage without a board of directors, but this is a limited exception. Corporation law is well established, okay? It's one of those things where you have to really look through what the law is in all the 50 states globally, like by large. So this is kind of cool. Let's talk about the disadvantages of a C corporation. So if you think about a C corporation, what are the drawbacks that you need to be aware of? First of all, you have complexity, and then you have the double taxation. This is one of those things where you have to understand. When I talk about complexity, a corporation is more complex to operate than an LLC or a sole proprietor for that matter. The corporation laws require more formalities in how a corporation is managed. Let me give you an example. Shareholder and director meetings are required. Proper notice must be given and minutes kept. In contrast, LLCs can be managed more informally. So corporation laws also tend to have stricter record-keeping requirements. So basically, when you actually contrast that with sole proprietorship or LLCs, basically you have administrative flexibility. So you also have the double taxation, which you don't have as a sole proprietorship, or you don't even have it as a partnership or an S corporation for that matter. Okay, so a corporation is a separate tax-paying entity unless it makes an election to be taxed as an S corporation. That means a C corporation pays corporate income tax on its income after offsetting income with losses, deductions, and credits. A corporation pays its shareholders dividends from its after-tax income. The shareholders then pay personal income taxes on the dividends. This is often the double taxation thing that I talked to you about earlier. One thing I want to say here is that you also have the ability to actually, if you don't like the disadvantages of a C corporation, you could try partnerships, because partnerships are kind of interesting too, because a partnership really is essentially the multi-owner version of a sole proprietorship. And most states require very little, if any, paperwork to form and maintain a partnership. This circumstance alone is the reason many relatively simple early stage businesses that have yet to achieve significant profitability are organized as partnerships instead of formal corporations. The arrangement can be especially attractive for small companies without employees in which the owners do most of the work. Partnerships are also commonly used for real estate holding companies because rental income is not subject to FICA tax regardless of entity type, and certain professional service firms such as accounting firms. So even though paperwork requirements for a partnership are minimal, multi-owner companies are by nature more complicated than sole proprietorship. So it's extremely important to have a partnership operating agreement that controls the operations and ownership of the company. So there are some major financial considerations you need to plan for as well. Profits don't have to be divided equally. Partnership income is generally subject to FICA tax. Payments to partners are not wages. And the partnership does not need to run payroll or file payroll reports if there are no non-owner employees. So let me give you a winner here. So which entity type should you choose for your business? I mean, basically, we're talking about transitioning from sole proprietor to a C corporation, but there could be some cases where you can say, you know what, I want to go with an S corporation or a C corporation, on an LLP, on an LLC, because I don't like transitioning from sole proprietor to a C Corp. I don't like C Corp for that matter. So which one should you go for, really? Well, it's important to understand that to think about choosing an entity type, think about what's really what kind of goal you want to reach, okay? And it's really important to really understand that it's not just about your situation. It's about your family situation, whether you want to go for an S corporation or a C corporation, or you want to go for also your states of incorporation, because some states are better or actually more attractive for a C corporation or S corporation or LLC than others, right? It's one of those things where you have to really see which situation applies to your specific state. One thing I want to say for sure is that you want to go back and see the advantages and disadvantages of each structure and see which one works for you. So if you're currently a sole proprietor and you're saying, listen, I think I want to go, I don't like transitioning to a C corporation, but I want to transition to an S corporation. First of all, ask yourself, do I qualify to be a shareholder in an S corporation? Because an S corporation is pretty restrictive. Or you can say, do I qualify to be a member of a new LLC? So what are the conversion process? Well, what is the conversion process? And it's one of those things where sometimes, depending upon the size of your sole proprietor and the state that you are actually operating from, there could be a pretty straightforward process or a pretty convoluted one. So please let us know in the comment section your specific situation, and one of our team members will get back to you, because we can't really touch on every single scenario here. So I'm not going to, and also in the interest of time, I'm not going to really talk too much about this, but let us know, and we'll certainly get back to you based on your specific situation. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about going from sole proprietor to C corporation. And so let me do a quick recap here. So I gave you the overview, the pro tips, the bonus, the approach, and the winner. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.